Hey everyone, welcome back to Chart Stocks. Today we're talking about something that could shake up the markets. This week's U.S. jobs report. Citigroup just issued a warning. March's non-farm payrolls might be the first clear sign that the U.S. economy is slowing down, and this could be the start of a bigger shift heading into summer. Let's break it down. Citi is forecasting that the U.S. added only 95,000 jobs in March. That's a huge drop compared to the average over the past year. They also expect the unemployment rate to rise to 4.2%. That may not sound high, but it's a sign that job growth is slowing and the trend could get worse by June or July. Citi analysts say that while layoffs remain low, the real danger is in hiring. Companies are becoming hesitant to recruit, and typically, spring and summer are strong hiring seasons. But this year might break that pattern. They point to weakness in construction, hospitality and leisure, retail, professional services. These are usually the sectors that lead job recovery, so that slowdown is significant. Citi also highlights government downsizing. Federal and local agencies are cutting back due to funding shortfalls and political gridlock. They estimate 10,000 government jobs could be lost in March alone, with up to 300,000 cuts possible through the summer, which could push unemployment up by another 0.1 to 0.3 percentage points. Wage growth is also cooling. Average hourly earnings are expected to rise just 0.2% in March, and job switchers, who typically command higher salaries, are now seeing wage growth fall back to pre-pandemic levels. This suggests that even with tariffs and short-term price spikes, we may not see broad-based inflation pressure from wages. So, what does this mean for the Fed? Citi believes the data will give the Fed a reason to resume cutting rates in May, and that we could see a total of 125 basis points in cuts through 2025. In other words, the labor market may become the Fed's top reason to shift policy. To sum it all up, slowing job growth, rising unemployment, cooling wages, and government cuts on the horizon. All of this adds up to a clear warning sign that the U.S. economy may be entering a softer phase. And that makes this week's jobs report must-watch data for every investor. If you found this breakdown helpful, be sure to like, subscribe, and drop a comment below. Do you think the Fed will cut rates in May? And how are you positioning in this uncertain market? This is Chart Stocks, and I'll see you in the next one.